Good afternoon, traders. Welcome. So today's video, we will be covering Euro GBP, a trade I executed the other day, and GBP JPY of a trade that we entered this morning in the New York session. So first things first, let's dive into Euro GBP. And as you can tell, take profits have been hit. This was roughly a 1 to 3 risk to reward. We ended up taking the full 1 to 3 risk to reward ratio with up just short of 3% on this trade. So if you want to know more about how I got into this trade on Euro GBP, please click the previous video for more details. So moving forward to GBP JPY, we actually executed this trade in the open of the New York session. This was a short intraday trade. We were only in this trade for only a handful of hours, and I will go into a top-down analysis of what prompted me to get into the trade and what prompted me to exit the trade. So first things first, we are on the 15-minute just to show you just a zoomed in breakdown of what happened. Price came down in this range, came back up and retested this trend line, retested and confirmed the fib trick, and price then confirmed to stay below the 50 EMA based on the 15-minute time frame. We were actually looking at the hour time frame. We were looking at a very strong bullish uptrend, and we were actually looking to take a short against the trend, so a counter trend trade, but it was only going to be for a short time. So at the very most, considering structure was making higher highs and higher lows, we decided that it was wise or advisable to only take at the max to this major swing here if the opportunity presented itself. So there was that conclusion there. And then also too on the, let's see here, on the 4 hour, same thing, major higher highs being printed here, higher high, a higher low, a higher high, a higher low, and this higher high, we're just using this swing high, and this would have been that equal low here. That price, I would say, would probably struggle, have some exhaustion. Keep in mind that we are above the 50 EMA. So for me, this was the furthest target that I was assessing to potentially take price to before even pulling out our fibs. So I also zoomed up to the daily chart. The daily chart didn't really tell me too much. There was a lot of economic impact here. There's a very strong bullish candle in the previous couple of days. We are now pulling back into a retracement. I did see price is almost exceeding this 205. Was it a 205, 29, 300 level? And what comes up must come down. So there's going to be some type of correction, some type of pullback. And as far as using our Fibonacci levels, I would say confidently, like I said, 61.8 is one of the strongest areas to respect as far as the Fibonacci. We also have a support and resistance. We have price on this level acting as resistant, and if price was to come down, it would act as support. So this is probably the absolute furthest swing hold of a trade. But looking into short term, I was looking to take it only to the, let's see here, the previous next fib level would be the 23.6 or the 38.2, depending on structure on the lower time frame. So once again, this was an in and out trade. We did not plan on holding this long term, but this gave me a very strong bias of where price was going. So let me delete that. I actually ended up zooming back down to the hour chart, and to bring some more analysis, I will delete my technical tools for clarity and show you how I actually enter this trade. So basically, I drew my trend line from the tip of the wick, and remember, what's the saying? We want to touch as many wicks as possible and cross as many wicks as possible as well without compromising and crossing the bodies of the candles. So this is the realm. We can use it for this historical example of how I entered the trade. And we also then ended up pulling out our Fibonacci, and we took it from this swing high to this swing low. And as you can tell, price is actually right in our golden zone, which is that 61.80. So one confirmation, we have the trend line respecting multiple times. We have one tap, two tap, and eventually the third tap was here. So there was a confluences there. We have the golden zone, and then I also ended up pulling up my fib trick. So I wanted to see if the move was completed within the move. So what I did was I jumped down to the 15-minute. I drew my swing low from here. Let me get my other tool out. And took it from this swing high. And our fib zone, our fib trick completed zone is this minus 27 in the minus 61.8, which is here. For those that are more novice and you're still trying to understand, like, okay, where is the fib being drawn from the beginning? So let me do this for some helpful tips here. So I'm highlighting this tip from this here, this swing low, to this swing high. Why? Because price then came from here, came up, and came down, wicked here, bodied, and then continued up to the minus 27, minus 61.8 fib trick completed zone. So that's how I am applying the fibs, and that is what I'm seeing. So there we have another confirmation there. That's third. Also in the 15-minute, we have a candlestick analysis. We have a reversal signal. We have a doji. When we have that just relevantly right here, let me bring this down for you. As you can tell, price made an indecision candle, and then price then dramatically had a bearish engulfing. So when this was happening, there's a lot of price action. This was closer to the London overlap New York Open, and I had to be very concise on executing this trade. It was happening very, very fast. When I say fast, I mean within minutes. And I actually zoomed down to the 5-minute to make sure I was capturing the move appropriately. And as you can tell in this region, so I saw this doji, but we didn't touch our trend line yet. It did complete the move as far as the fib trick, but I wanted to see some more type of price action, more confident to be added to my confluence before I entered the trade. I waited to see an engulfing candle, and I saw an engulfing candle, and it was pretty huge. I was like, you know what? I'm going to likely miss this trade, because if you look closely, the wick, it wicked all the way down to the 203.808 level, but then it came back up. So once I waited for the candle to close, this is why we wait for the candle to close to confirm the price action. Also, it helped me get a better entry, a more optimal entry than entering down here versus up here, and that will change your risk to reward ratio dramatically. So once the candle closed, I entered off the close of this candle. I put my stop loss, what am I saying? What I'm going to say before I say it? Just outside the previous fib level or outside of the fib trick zone. So for here, going back historically, I think, like I said, I don't like going over 30 pips. It was somewhere around 28, 29. Let's just say 30, just for, the educational purposes here. And then I pulled my risk reward tool all the way down. I went back up to the 15-minute, and then I actually had to go to the hour for more clarity to see exactly where our fibs were, because we drew this based off the hour. And our take profit one was here, which is a 2.3. It wasn't really the best. Like I said, 1 to 2 was a minimal baseline as far as a risk reward for a healthy trade. But I like to see oftentimes beyond that, and 1 to 3 is more comfortable for me, and that's just my personal bias. So this was a 1 to, let's just say 1 to 3, 1 to 3.5, give or take. And so let me back up here, going back down to the 5-minute. We entered the trade. We only risked, I believe, 1% of this trade. And proper risk management, you have to also remember too, what you're willing to risk, you have to be okay with losing. You can't be putting 10%, 7%, 9%, these different things that you hear from these different influencers. To be a successful trader, you need to have proper risk management. That is how you become successful. All right, so that was the trade we executed there, and then once that happened, we let the trade run. Within minutes, we were in profit. I was like, wow, we're gonna be in and out within a couple of minutes, and I actually sat on my hands and moved on to the next analysis. And before I knew it, I believe, let me go up to the hour chart. We were only in this trade for maybe like a handful of hours. We were out by nearly out by 11, out by noon. So, like I said, very, very healthy risk reward ratio. I actually didn't take any profits. I was actually away from my trading desk, my trading office, and by the time I got back, price was hovering around like a 203,500 level. And I actually just let the trade run. But most importantly, as well, I also ended up moving my stops to break even to mitigate any risk. So it was a risk-free trade. So there is that. There is that successful trade. Um, Again for the week. So there's my friendly update. If you are liking these videos, please hit that like button and don't forget to subscribe. Appreciate you all. Thank you. Bye.